In the late 1970s, you could walk into any college campus on career day and find some top insurance companies sitting behind an 8-foot table just trying to recruit new blood into the industry. To them, it's a game of attrition. They'd throw a lot of bodies up against a wall, and some would stick, but most would not. But those that stuck, well, they would end up producing about 90% of all life insurance sold in the U.S. Without a doubt, this was an expensive distribution model. See, carriers were often strapped with the fixed costs of agent training, office space, administrative support, salary and benefits. If they could keep their agents focused on sales and not the golf course, well, they could build themselves a pretty solid insurance company. By the mid-1980s, a whole new distribution model was emerging. See, a small group of independent entrepreneurs, they sort of got together like a band of brothers. Actually, they called themselves brokerage general agents or BGAs. But anyway, they approached carriers with this almost freaky concept. They said, hey, carriers, how about you fire all of your career agents? That's right. Just walk in tomorrow, thank them all for their hard work, and just let them all go. Then we'll turn around and offer these unemployed agents a chance to come back to work. We'll call them independent brokers, and we'll tell them, if you want to come back and sell for us, we'll pay you twice as much commission than we did before. That's right. We'll double your agent's compensation. But here's the catch. We're only going to pay you when you sell something, and these brokers will be responsible for their own expenses. So the carrier said, okay, so let me understand this. If I shift all the burden of my fixed sales costs to the shoulders of my new brokers, what are you going to do, Mr. BGA? Well, since these brokers are now free to sell wherever and for whomever they want, our job as a BGA will be to convince these brokers to sell for you. In fact, we'll also help you recruit new brokers, educate them on your products. We'll even process their insurance applications. And for that, we'll get paid an override commission for every policy that's sold. Well, it didn't take long for that plan to incubate, hatch, and fly. Essentially, the brokerage industry was born. So carriers immediately scrambled to build their new distribution strategy. So they contracted BGAs in specific geographical locations. This way they can maximize their ability to reach brokers anywhere in the U.S. and prevent their agencies from competing for the same brokers. But to attract new brokers, general agencies clearly needed a stable of top carriers and products. It had become a modern-day gold rush, and everyone was out to discover the secret sauce to running a successful agency. Information and knowledge was key. So BGAs formed these study groups. They were really a bunch of BGAs who were close-knit friends, like drinking buddies that trusted each other. Well, they would meet once a year in different cities to swap information on marketing ideas and operational improvements and best practices. Divulging their agency trade secrets, well, that wasn't an issue because their fellow study group member was hundreds, if not thousands of miles away from their agency. But that was all about to change. The 1990s ushered in the World Wide Web, and man, did it have an impact on the industry. See, smaller BGAs could offer 24/7 service and create the illusion of this large agency by simply building a website. Larger agency could expand beyond the shackles of their regional marketing efforts and create this virtual national presence almost instantly. It was like everyone could be everywhere at any time. Now, a BGA in Philadelphia was actually conducting business virtually in San Diego, and the pressure to maintain broker relationships was almost like a panic stage. See, some BGAs embraced the competition and said, hey, let's rumble, while other BGAs consolidated, merged, or simply sold their agency to the highest bidder. At the end of the day, the gloves were off. This was big-time competition. It was war. The battlefield was based upon who could provide the best service, top carriers, and better commissions. But let's face it, to an independent broker, commission payouts aren't everything. They're the only thing. The more an agency could pay them, well, it was just easier to jump ship to a new BGA relationship. And most agencies realized it. And they said, well, it's time to circle the wagons. As we approach a new millennium, these previously known study groups, well, they formalized themselves into marketing organizations. Bramco, LifeMark, R Group, NBA, TMA, just to name a few. They all sought to help carriers standardize processing, create new industry solutions, and really to consolidate communications. Now, it wasn't long until these members decided, why don't we just pull our carrier contracts and, for that matter, premium production as well? That way, everyone can access top carrier contracts and all the members could maximize their compensation schedules. So the last 40 years has come down to this. Every BG in the country can now stand up and say to their brokers, I've got great experienced staff to help you. I've got a national presence. Yeah, I've got a website and even e-tools. I've got access to practically any carrier contract you want, and I even can pay you the top commissions. So here's the big question. How does a BGA, or even a carrier for that matter, differentiate themselves in the market? When you're surrounded by your competitors, how do you stand out from the pack? One word: service. That's right, service. We've gone back to the basics. It's all about providing your brokers unprecedented service. Just some good old-fashioned elbow grease, mix in with the newest technology, and you can actually redefine the next chapter of this story.